This is the Tuesday edition of Market View right here on Eswatini TV. I am Natalie Sitole. Welcome to the program. The collapse of talks between the U.S. and Iran following a fragile 2-week ceasefire has now given way to control over one of the world's most critical oil routes, with the U.S. moving to tighten its grip on the Strait of Hormuz and Iran warning of possible retaliation. Diplomacy has become almost questionable, and the cost of doing business across borders is mounting. Locally, we've witnessed the conflict bearing impact at the pump, and we now want to hear from Business Eswatini. With evidently disrupted global supply chains, what's their reading of these developments? But first, let's have a look at our business stories. In our business report this afternoon, Conco Limited, through Business Eswatini, has invested 105,000 emalangeni in roofing materials to support the rehabilitation of Mkhuzweni Health Center, demonstrating how corporate social investment can directly strengthen social services and community well-being. The Minister for Health, Honorable Mduduzi Matsebula, says the contribution comes at a crucial time and will go a long way in ensuring the full rehabilitation of the health center, allowing nearby communities to benefit from improved health services.
We are not just handing over roofing material. We are handing over hope. Yeah. We are restoring dignity. And we are proving once again that the private sector of Eswatini, through Conco, has a heart. Because when the private sector leads with compassion, when we collaborate instead of standing apart, and we plow back into our communities, everyone rises. Honorable Minister, on behalf of my president, and BE indeed, and certainly on behalf of Conco Limited, it is only my privilege that today we hand over roofing material valued at 105,000 emalangeni for the restoration of Mkhuzweni Health Center.
The Minister for Health praised Conco Limited and Business Eswatini for the investment, highlighting that it is a significant contribution towards strengthening the country's healthcare system.
On behalf of the entire health sector and the Minister of Health, I wish to express our sincere appreciation and warmest gratitude to Business Eswatini, in partnership with Conco, for this generous and timely intervention towards the rehabilitation of the facility. Your contribution goes beyond infrastructure repair. It restores access to essential services, renews hope within the community, and reinforces confidence in our health system. This gesture clearly shows the critical role that the private sector continues to play in strengthening national development.
Conco Limited continues its drive for social responsibility. In partnership with Business Eswatini and Vugani Bomage, the company invested 2.4 million emalangeni to rehabilitate Ward 18 at the Mbabane Government Hospital. The ward was officially opened in January this year. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
The Business Federation of Eswatini has identified 11 sectors where local small and medium enterprises are ready to provide services whenever the country hosts big events. The Federation's president, Tulsile Dladla, presented this to the Minister for Commerce, Industry and Trade during a closed meeting, saying it is time for local small and medium enterprises to be given a fair share in large business opportunities. She unpacks the details of the meeting.
We wanted to alert the minister that any national events, anything that is happening in the nation of Eswatini. So it's like MSMEs, we've been like hiding behind the scenes. We haven't been visible to ensure that whatsoever happened, where are we participating as MSMEs? Because if you talk national events, you talk to the indigenous people participating economically in each and every event. The sectors that are ready to participate in the forthcoming event, the 2027 COMESA chairmanship, where Eswatini will be taking over. Food and beverages, people would want to test the cuisine of Eswatini. So we do have our people who know what to cook, and they are dominating that space, even as I speak, Maswati. And art, craft, and cultural accessories, we do have. They would want to identify with what are the crafts, what are the accessories, cultural accessories that we have, like Matabesha and the others. We do have our members there. Merchandise and cultural apparel, entertainment and creative services. We do have entertainment in our space. Event management services. We do have a lot of people, like we are in an office where we are doing events right now, and stage, sound, lighting, printing and branding, security, cleaning, decor and catering, transport and mobility services, accommodation alternatives such as homestays. Some people, they wouldn't want to stay in towns, they would want to have that feel of home wherever they are, so that we show them a bit of who we are as Maswati. We do have photography, videography. We do have fashion, beauty and cosmetics. We do have technology solutions such as event apps, ticketing and Wi-Fi systems. So we're saying these sectors, can they be reserved for MSMEs, for the indigenous Swazis?
And that is your business brief. Market View continues after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back, and moving on with the program. petrol prices could surge to 30 emalangeni per litre if the US, Israel and Iran conflict over the Strait of Hormuz continues. This has been shared by Business Eswatini's Chief Executive Officer Eswatini Dlamini, who states that the country could, or rather would, face severe economic pressure in the coming months. He explains that Eswatini consumes about 1 million litres of fuel daily, while only having storage capacity of 2 million litres, which is enough to last just 2 days. He further says they are currently working closely with government to address challenges faced by fuel retailers. He emphasizes that the strategic oil reserve is a critical investment to protect the country during global fuel shocks.
As a business community, we would like to begin by decrying what is happening over there. And we hope that the warring parties will come to the table and find a collective solution to the problem. And to your question now, you may ask how this will affect this Kingdom of Eswatini. If you remember very well, 2 or 3 years ago, the Russia-Ukraine war started. I think we came through the same channel with you to tell you that even though it's far away, but we'll pay for it. And a lot of people didn't believe us until they started to see the price of flour going up, until they started to see the price of grain going up, until they started to see even the price of fertilizer going up. And then we said, we told you so. Either way, all our households of this kingdom will pay for that, even though we didn't start the war. It's the same thing even now with the USA-Israeli Iran war. We didn't start it, but certainly we are already feeling the deleterious effects of that war already as we speak. And it started with the fuel shortage, right? And it will continue, by the way. And I may even whisper to the viewers that just 4 days after the war started, one of the vessels that was detained actually carried a big load for fuel destined for Eswatini. And it was detained. And we couldn't announce it to everyone, but we just thought it was just one vessel. And obviously now even a few more have been detained, which means, generally speaking, across the world, and indeed across Africa, there is a shortage now of fuel. There will come a time when it's so short that it's not available at any price, right? So right now, shortages. We're reasonably okay now in terms of fuel. You know why? Because South Africa was able to stockpile. When immediately this war started, in South Africa they started stockpiling. They've got the fuel reserves, which we are still building here. And when it sort of opened up a little bit, so we are using those reserves. But at some point in time, they will run dry. And another thing that's happening in the region now, you must remember, as a country, we cannot go to the Middle East and buy fuel, the whole vessel. We sometimes, in fact, as SADC, we just need just a small portion of the vessel, which is too small. So what happens is, most of the SADC countries here, they use what you call fuel traders. Some people, you call them middlemen, as it were. What the middleman does, you come to Eswatini, go to Total, you go to all of them, how much do you need? They'll say, then you go to Lesotho. He will combine the quantities so that he can go bargain with the vessel rather, to say we need so much. That's called a fuel trader, right? In the price of fuel, as part of the duties, government used to give the people like the fuel traders in Matsapa 20 cents as the commission for that trader, right? And I think the new pricing area now, they've increased it to 40 cents per liter, right? The problem is the fuel traders now are charging R6.50 per litre. Take it or leave it, right? So for the past few weeks now, everyone in Matapa as a fuel trader has been losing money because per litre, R6.50, which is not part of the pricing of fuel. They've been losing it. So they've been saying, I cannot order fuel, even if it's available. And that's what we're discussing now with government. And then there's another problem. Every time you uplift fuel from South Africa, SARS is saying, I will charge you VAT of something like R6.80 per litre until I see the truck crossing into Eswatini. If it does, I will then refund you. The problem is, SARS hasn't been refunding these people. There is one company now in Matapa, it's owed over 250 million. A small fuel supplier in Matapa, SARS. And we are saying, we have what you call Asikuda. When you uplift in South Africa, the system through the border gate system is supposed to pick it up that Inati is buying fuel destined for Eswatini, and the border post online should be expecting my truck to pass through. So why do we need to pay for that? Because it's just a lot of money now tied to SARS. So we engaged the Minister of Finance, and together with the Minister of Finance, we have moved the issue to the SACU, to the SACU Secretariat, right? The SACU Secretariat has taken it on board because we had a meeting just last week to say this is a serious issue. Against the backdrop of integration, this issue shouldn't be like this. So we're very, very pleased that SACU is working to resolve that issue of a R6 per litre. Because these are just many constraints. So you have the fuel traders, R6.50 problem per litre of fuel, and then you have the SARS issue of around R6.80. That's already 12 Rand going somewhere, and per litre of petrol now we're paying what, 22 Rand, and probably 6 Rand of that is going to government. The good thing is this: we were working in silos before. They were working in silos, BE working in silos. All of a sudden, I think government is coming to the party and discussing this. How do we partner or collaborate effectively so as to prevent, a calamitous situation in the country? So now the fuel traders in Matapa are having these frequent meetings now with government to say this week, how are we looking on stock? What are the issues there? And remember this, and most people did not know that. Even if we can go buy millions and millions of liters of fuel, we don't have the storage in this country. Did you know? Do you know how many days that we have? If I say amongst all the fuel traders, only 2 days worth of storage, which makes now the strategic fuel reserve even more critical. If now actually it has exposed how important that strategic fuel reserve is now. Only 2 days supply. This country consumes around 1 million liters of fuel a day, just to keep you guys going. The business is working just fine. 1 million liters, about 32 million liters of fuel. And we can only handle up to 2 million liters of fuel in our storage. It's just 2 days supply. After that is gone, then you have to go buy again. That's the problem. What's my projection going forward? The price of fuel is going to go up. I can tell you now, it's possible that it can get to 30 Rand per litre within a very, very short time. And when it gets to 30, it will cause hyperinflation. In fact, already this pricing is already affecting the inflation situation in this country. And you recall not too long ago, we published some figures that inflation is standing at 1.9%, the lowest inflation figure ever I can remember. That's about to change. You'll see inflation creeping up because the impact on the cost of commodities in general, everything is linked to fuel anyway, it's transported by fuel. You see the prices in supermarkets already, they're going ticking up a little bit there and there, all over the place. That is going to cause more inflation. And if it causes more inflation, what's going to happen? The monetary policy intervention will kick in because then central banks say, I need to increase interest rates. When you increase interest rates in order to rein in inflation, you make the cost of doing business in the country more expensive. But you also restrict the economy from growing even further. Now, do you see now the impact? But it started with Iran, Israel, and US. And this country was not part of the decision. But we are paying such a huge price. And I'm talking basic commodities here. We are, as a country, paying a big price for it. And yet nobody asks us for our permission to start the war.
We've just heard there from Business Eswatini, CEO Nati Dlamini, speaking to the outlook and rather economic impact of the ongoing war in Iran. The Market View continues after this. We'll speak to economist Zanele Sibia.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back for our market analysis segment. In-house economist Zanele Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you very much for your time. So, key data has actually just been released starting yesterday, including earnings, and we are also expecting something with regards to inflation. Is this driving market direction any differently, or the war in Iran still remains in focus?
Thank you, Natsile. So the war in a good afternoon to you, and also a good afternoon to the viewers. So the war in Iran, Natsile, continues to be the major driver of economic activity, more especially within the stock markets. But we are seeing a bit of rebound and a bit of return in terms of activity, largely driven by the fact that we've heard from the White House yesterday saying that, Tehran has reached out to Washington to begin talks. And also it became clear what the objectives of the U.S. blockade of the Strait of Hormuz is going to be in terms of the end objective, that being to force Tehran back to the table and with a little leverage this time around. So markets are somewhat reacting positively to those news. And however, markets are also taking this breather notes to focus on the data that is coming out, largely the earnings data and also the inflation data, because it is going to give direction on what the Federal Reserve Bank is expected to do going forward across, with the interest rates. And that's the story that we expect to see happening across the globe. So in terms of the numbers, the Dow Jones Industrial Average is back almost to those
pre-war levels, sitting at that 48,000 mark, gaining some 301 points in trade. The Nasdaq Composite Index gaining 280 points in trade, and the Standard & Poor's Index for the top 500 companies in the US gaining 69 points, sitting steady at that 6,800 mark, looking to touch that 6,900 mark, which is the pre-war levels that we're seeing across both indices. So it's only the Nasdaq Composite Index that's not yet back on those pre-war highs, but we're back on the 23,000 mark from the 22,000 levels that we're seeing in the past couple of days. So now that's largely buoyed by the good news coming out of Washington, in terms of the talks, and also that the main goal to this blockade is purely to get Iran back into the fold, and this also trickled into the European markets. The FTSE 100 in London basically flatlining at that 10,587.19 in all shares trade, gaining some 0.04% in today's trade, and the DAX in Germany just a few points shy of that 24,000 mark, but it seems there is some positive movement, and there is some optimism coming back into the German stock markets there, gaining 211 points in today's trade. The CAC 40 in Paris there, gaining some 43 points in today's trade, largely driven by the optimism around around talks of ending the war, and also the fact that we've not yet seen any retaliation coming through from Tehran within the Strait of Hormuz itself, and also no other harbors and no other energy installations have been attacked ever since the U.S. presence within that Strait of Hormuz region there. And then when we move on to those Asian bouncers there, again we're seeing a bit of return to some pre-levels type of level, some pre-war levels there in Japan. We're seeing the Nikkei gaining 1,374 points in today's trade, sitting at that 57,877 mark. Now those are the levels we are used to post the elections of Prime Minister Takaichi within the Japan economy. So signaling the fact that, the good news coming out around the talks, and also the lack of escalation thus far within the Strait of Hormuz and within the Red Sea region as well, is being read by markets within positive light. But we must note that in terms of traffic within the Strait of Hormuz, it remains relatively subdued. It remains relatively at the levels at which it was when Iran controlled the strait there. In Hong Kong, we're seeing movements again back above the 25,000 mark, gaining 211 points in today's trade. And in Shanghai, the Shanghai Composite Index has broken the 4,000 mark yet again, just a bit shy of the pre-invasion levels, which were sitting around 4,200. But the fact that we are above the 4,000 mark does signal that there is some thawing of investor sentiment within the Asian bouncers there. Also, when we come to South Africa, the South African Stock Exchange has also begun to rally, just sitting at 119,000 in today's trade, gaining 825 points in overall trade today, largely driven by those sentiments of the war ending, and now investors coming back to look at the fundamentals in terms of the performance of the mineral stocks, and also in terms of the performance of the financial stocks and the industrial stocks, which we expect to continue doing relatively well when eventually the war does end. And it does also bring into mind the question around interest rates and the Federal Reserve trajectory if we are to see a prolonged war within within Iran. And then in Eswatini, we have not seen any changes there on the Eswatini Stock Exchange. And then in terms of the precious metals, gold has continued to sparkle a bit. They're gaining some 0.37 points in today's trade to trade at $4,795.10 per ounce, largely driven by the fact that there is uncertainty that's still there within within the oil sector, and now investors are continuing to hedge against that in the inflationary risk and that instability, and gold continues to glitter. And then in terms of Brent crude oil, although subdued, it still remains just relatively below the 100 mark, which shows that in as much as we have that optimism within the equities, the price of Brent crude in itself continues to reflect the risks that are still inherent within the market. As we've already stated, that we've not seen ship traffic and tanker traffic increasing to pass through the strait, but there is a bit of calm right now, and we are continuing to watch that price going forward because it's the main indicator of what the market feels about the war. And then in terms of the currencies, the Lilangeni is on a relatively stronger footing against the dollar, back on that 1638 Malangeni, losing marginally against the euro, sitting at 19.32, and then also just again losing a bit against the Japanese yen, largely driven by the fact that we are seeing the shift towards those emerging currencies as the war begins to die down in the Middle East. Thank you, Martin.
Thank you, Mrs. Bia, for that analysis. In-house economist Annelise Bia sharing insights on the day's trade. This has been Market View. Thank you for your company. Until next time, have a great one.